Okay, good evening to you all, and welcome you to the meeting. And I would like to thank each and every one of you for your cooperation so far. And thank those who have already subscribed to the channel and heed to my advice. Thank you all. And the reason for making this particular video is on the basis that I've received a lot of questions in connection with the understanding level on sinking fund. So most of you have requested that I do a video on the sinking fund and explain it into detail for you. And that is basically what I'm going to do. Now, we have already learned that when businesses or companies go in for loan, the loans has a tenure, or the loans have a period or a payment period or a payment plan within which you must comply with and pay the interest or the interest plus the principal, depending on the loan agreement. One classical one is the debenture that we've looked at. That debentures are long-term agreements, and we also learned that the yield on debenture is interest. Now, since such a loan is a long-term agreement, some businesses will decide that from the very first day they have taken that particular loan, they are also going to set aside an amount of money into an investment vehicle, where upon maturity of that loan, the investment vehicle will yield investment income, or there will be a return on that investment they have made, and they can use that to offload the loan or part of the loan. When businesses are doing that, or when businesses want to engage in such an investment, what they basically do is to set up an investment portfolio called the sinking fund. So it is from this sinking fund account that they get the money to finance the repayment of the loan. And so therefore, we learned that when businesses are going to finance the repayment of the loan, they do it from several sources. We have internal source, and then we have external source. We learned that from the internal source, they can use their income surplus to do that. From external source, they can issue fresh debenture to do that, or set up a sinking fund account, and they can use the sinking fund account to do that. And that is what basically we call, they are going to finance the payment of the debenture through a lump sum payment. Now, we have extensively discussed the theoretical aspects of debenture payment by lump sum payment. And so therefore, I will not waste much time to do that. If you need more explanations, you visit your handouts and you get more explanations from there. If you have any questions, you are free to contact me and ask me, and then I'll be glad to answer you. Now, in order to understand whatever we've been saying so far in theory, there is a practical question over here we are going to use to explain that. Now you have that of Strode Limited, who have issued 135,000 16% debenture at par in 2001, redeemable at 101 and 31st December 2011. Under the terms of the debenture trust deed, a sinking fund has been built by an annual appropriation out of profit, which was invested together with any income which has arisen on the fund in gilt-edged securities on 31st December each year. The trustees have the power to purchase for immediate cancellation any debenture available at a market price below par to realize the sinking fund investment for the purpose. On 1st January 2011, there were the following balances in the books. So you have the debenture outstanding to be 80,000, sinking fund to be 79,350, represented by an equivalent amount in the sinking fund investment book. During the 12 months ended 31st December, the following took place. On 30th June, half year's debenture was repaid. On 1st July, 5,000 debenture was purchased in the market at 99 and cancelled. To provide funds for this, investment costing 5650 was sold and realized 5,500. Interest of 3850 was received on the sinking fund, which was not invested in view of the impending sale. On 31st December, the debentures were repaid together with the half year's interest thereon. To provide funds for this, The remaining investment was sold and realized 76,100. And you are required to prepare the following accounts: 16 debenture account, 16% debenture redemption account, sinking fund investment account, and debenture interest account. Now, in order to do that, first of all, you must open your account and bring the opening balances. Now, the solution is here. So I'm just going to walk you through the solution and highlight them and explain them. So for example, if I open my 16 debenture accounts, in the question I was told that there is a balance of 80,000. So you bring it in the debenture account over here, just like that. I wanted to zoom in. They are telling you that there is a debenture in the books of 80,000. So you bring it here like this. Sinking fund has a balance of 79,350. Bear in mind, your sinking fund account behaves like your income surplus account or your profit and loss account. And so therefore, these two accounts always have a credit balance. And so if sinking fund account behaves like this account, then automatically it should be having a credit balance. And that is why we have placed the balance brought forward at the credit side. Your sinking fund investment account, we were told that it is also represented by an equivalent amount in this account. The sinking fund investment account also behaves like your asset account. And you know your asset accounts always have a debit balance. And so therefore, you always bring the balance brought forward at the debit side. Those were the balances in the books as we were told at the beginning over here. This is it. These two. So we have basically dealt with this particular illustration or information over here. Now, the next information we are going to deal with is that we were told that on 30th June, half year's debenture interest was paid. So you know that interest on debenture is paid twice every year. Interest on debenture is paid twice every year. And so therefore, somebody can also say that interest on debenture are paid semi-annually. And so therefore, we have taken, or we have debenture standing in the books of 80,000 at the beginning of the year, and the interest tag on the debenture is 16%. So if you strike 16% on the 80,000, you are going to have 12,800. You are going to have 12,800. But since it is for a half year, you divide your 12,800 by 2. And so therefore, you are going to have 6,400 standing in the books as your half year debenture. So let me take it again. We strike 16% on the debenture balance we have in the books, which is 80,000. And since it is a half year debenture we are paying, it is going to be 60% of the 80,000 divided by 2, which is going to give us 6,400. So it debits the debenture interest account 6,400, and then you go and credit bank account 6,400. It's quite unfortunate the bank account is not here, so I will dictate it, or I'll be saying it. So as you are watching, you open that account and also put it in over there. Okay. If you finish and you want me to have a look at it, you can do it and let me have a look at it, and I'll see if you've done the right thing. So as I was saying, you debit debenture interest account 6,400, then you credit bank account 6,400. So at this moment, if you open the bank account, you are going to have only 6,400 at the credit side of the bank account with the name debenture interest. Debenture interest. Now let's go to the next. Hold on, let me even check if these are the slides we used to do the lecture. Let me check if even I have the original handout here with me, and I can use that one so that one will be a little bit faster. Okay. So, as I was saying, we move on to the next question or the next point in our illustration. So the next point is saying that the next point is saying that on July 1st, 5,000 debenture was purchased in the markets at 99 and cancelled. And to provide funds for this, 5,650 investments were sold and realized 5,500. So what I was saying initially, okay, I think the bank account is also not here. So just as I was saying, you credit bank 6,400 and debit debenture interest account 6,400. So let me go back and use my slide. Okay. So the next question was saying that debenture costing debenture costing 5,000 was purchased in the markets at 99 and cancelled. Now, first of all, when we are redeeming debenture from the market, the very first thing we do is to transfer the par value of the debenture we are redeeming from the debenture accounts into the redemption account. Just like when you are selling an asset, a fixed asset, what do? You transfer the cost of the assets from the asset account into the asset disposal account. So we sell the assets or we dispose of the assets in the disposal account and not the asset account. So you don't also redeem the debenture in the debenture account. You do that in the redemption account. So the debenture account is having 80,000 as at the date we are going to effect the redemption. and the value we are going to redeem is 5,000. So we transfer 5,000 from the debenture account into the redemption account over here. So you debit debenture account 5,000 here in the name of debenture redemption, and go to debenture redemption account and credit that account 5,000 in the name 16% debenture account. That is the very first thing you do. Then you ask yourself, in fact, as you are doing this thing, you must have some questions you should be asking yourself. And once you have successfully answered those questions, it means that you are doing the right thing. If you are unable to answer those questions, it means that you can move on to the next stage. So now that we have asked ourselves the question, where or how much is the par value of the debenture we are redeeming, and we found out that the answer is 5,000, the next question is, what do? We transfer the par value from the debenture account into the redemption account. Number two, how much are we redeeming it at? We're told that we are redeeming it at 99, which is below par. And anytime we redeem below par, we make profits. We issue below par, we make loss. We redeem above par, we make loss. We redeem above par, we make loss. We issue above par, we make profit. So you must have these things at the back of your mind. Then, once you know that we are redeeming it at 99, you multiply. First of all, you should know that the debenture par value is 100. If you don't know, somebody will be asking, so how is it that 99 is a loss and 99 is a profit and all those stuff? If you don't know that the par value of the debenture is always 100, which the question will not state, you will not be able to answer the question, or you will not be able to answer this question, particular question. Why is it 99? Why is it 101? And all those stuff. So if I multiply 99% by 5,000, what it means is that I borrowed 5,000, but I am going to pay 99% of that 5,000 to the person I borrowed the money from, as at the market price today. So we are going to pay 4,950. That is how much we are going to instruct our bank to pay. So you debit the debenture redemption account 4,950 and credit your bank account 4,950. So at this stage, you should have two items at the credit side of your bank account. One is 6,400 in the name of debenture interest. One is 4,950 in the name of debenture redemption. Now, after you have effected the redemption, you ask yourself, on this particular redemption that I made, have I made a loss or a gain? Now you borrowed 5,000 and you are paying 4,950. What does it mean? You are keeping 50 Ghana cedis as a gain to you. So on this particular redemption, you have gained 50 Ghana cedis. And bear in mind, I told you that the sinking fund account acts as your income surplus account or your profit and loss account. So any profits or loss that has arisen in the course of the debenture redemption must be taken care of by sinking fund account. So if you have made a redemption and made a gain of 50, what it means is that you are going to debit the redemption account 50 in the name of sinking fund and credit the sinking fund account 50 in the name of debenture redemption. So you debit here 50, credit here 50 in that manner. Once you are done, the question went on and said that to provide funds for this, investment costing 5,650 were sold for 5,500. What it means is that I have to collapse part of my investment to finance the payment of this loan. Now, in an attempt to collapse this investment, I instructed the bank, or I instructed my investment broker to collapse investments costing 5,650 and give me my money, sell it and give me my money. Yes, they did that, but as at the time of sales, the market price of the thing I bought for 5,650 is now 5,500. So the buyer of that investment will give me 5,500. So what you do is that you debit bank 5,500 and credit sinking fund investment 5,500. And these entries will indicate that the money has been successfully paid and received by your bank. Now, on this payment or on this receipt, the thing cost 5,650 and I sold it for 5,500. So you ask yourself, are you gaining or you are losing? And the answer is a certain loss of 150 Ghana cedis. So you are making a loss of 150 Ghana cedis. The moment you hear loss or profit, this account should come into mind. So any loss, we debit. Any gain, you credit. So if I'm losing 150, that means I'm going to debit this account 150. On which account am I losing the 150? It is on sinking fund investment. So I debit here sinking fund investment. I go to sinking fund investment, the corresponding account, and credit it 150 in the name of sinking fund. So you can see, whenever you take a transaction or whenever you take a line or a paragraph, you must make sure you dealt with it holistically before you move on to the next. You don't jam the question with your solution. When you do that, you are going to suffer. So you pick one side of the question, deal with it, and then move on to the next one. So let's move on to the next point. Point 3. Interest of 3,850 was received on the sinking fund, which was not invested in view of the impending sale. Now, what does it mean? We have made an investment and we are hoping that the investment will accrue interest. And certainly the investment did so. So we have received 3,850 on an investment, which if we are preparing our trading profit and loss account, this interest on investment received is going to be amounted to as an additional income. So an additional income, what do? You credit your income surplus account and debit whichever account you are receiving the investment interest on. So we credit our sinking fund account in the name of 3,850 with bank. Then you go and debit bank account 3,850 in the name of income surplus. So when I come here, bank 3,850 has been received. Then you go to the bank account and also debit the bank account 3,850. So at this juncture, if you are preparing your bank accounts alongside, you should be having 5,500 at the debit side, should be having 3,850 at the debit side, you should be having 4,950 at the credit side, and also be having 6,400 at the credit side. Now let's move on to the next point. On 31st December, the debentures were repaid together with a half year's interest thereon. The debentures were repaid together with a half year's interest thereon. What does it mean? We are supposed to repay this debenture on the 31st December 2011. There is it. We took it 2001, and we are supposed to repay everything as at the close of 31st December 2011. And we are supposed to repay it at 101 at a premium. So now, in the interim, we have redeemed 50,000 or 5,000, sorry. So from July to December, the debenture standing in the books now is no more 80,000. There is 75,000. Why? We have redeemed 5,000 along the way. So at the end of December, the debenture standing in the books is 75,000. And it is this amount we have to pay and also pay interest on. Mind you, we pay interest on debenture on the outstanding balance. And so therefore, if we are supposed to redeem the rest of the debenture, which we have now agreed that it is 75,000, then what do? You transfer the par value from the debenture account into the redemption account. So I debit debenture account 75,000, I credit redemption account 75,000. To indicate that I am going to redeem this amount of debenture. The next question you ask yourself is, how much am I redeeming it at? And I just indicated to you that we are going to be effecting the redemption at 101 at premium. So anytime you are redeeming at a premium, you made a loss. Anytime you are redeeming at a discount, you make a profit. So if I borrowed 75,000 from you, and currently I am supposed to pay you an equivalent of 101%. If I strike 101% on the 75,000, I will be paying you 75,750. So what does it mean? You will instruct your bank to pay 75,750. So at the credit side of your bank, you should be having 75,750 in the name of debenture redemption, and also get 75,750 at the debit side of your redemption account in the name of bank. Once you are done, the next question you ask yourself is that, am I making a gain or loss on this particular redemption? Now I have borrowed 75,000 from you, or you have borrowed 75,000 from me, but you end up paying 75,750. Clearly speaking, you can see that you have made a loss of 750 Ghana cedis. So what do? Quickly, something should tell you that sinking fund is at play over here, because you've been told that anytime there is loss or gain, the sinking fund account is there to absorb that. So if I made a loss of 750 and I am to debit all losses and expenses and credit all gains and incomes, then I have to debit my sinking fund account with 750 Ghana cedis in the name of debenture redemption account. And that is basically what you are seeing over here. Then you credit your debenture redemption account in the name of sinking fund. Then the next question was that, or the question continues to say that to provide funds for this investment or the rest of the investment were sold for 76,100. The rest of the investment was sold for 76,100. Now you ask yourself, how much is the investment left in the books? So I'll give just like 1 minute to think about that and see, guess if your answer is as good as mine. Now, we have an investment in the books of 79,350 at the beginning of the year. Then we sold part of the investment costing 5,650. So you can see that what will be left in the books will be an amount of, I think, 73,000. Let me just calculation. 79,350 minus 76,100. No. 5650. So what is left in the books is 73,700 after selling the 5,650 from it. We are left with 73,700. But we sold it for 76,100. So the buyer of the investment is going to give us 76,100. So we credit our investment account 76,100 and debit our bank account 76,100. Then we ask ourselves, on this particular sales that we make, are we gaining or we are losing? And if the thing is 73,700 and you are selling it for 76,100, then it means you are gaining how much? 2,400. So I debit this account and I credit this account to indicate the gain I made on the investment. Then they said we did this particular redemption with the half year's interest that is left. So therefore, you should know that you have already paid 1/2 of the interest already, and you are supposed to pay the other half of the interest. Now, as at the end of 31st December, the balance of the debenture left in the book is 75,000 and not 80,000. So you strike 75,000. You strike 16% on the 75,000. You get 12,000. Divided by 2, you are going to get 6,000 Ghana cedis. And so therefore, the interest on debenture as at the end of the year is 6,000, and you debit the debenture interest account and also credit your bank account. Now, by so doing, you have successfully answered all the requirements of this question. So as I was saying, after solving it like this, means you have successfully answered the question. The next thing you are supposed to do is to balance off your accounts and do the necessary transfers. Now, the very first thing you are supposed to take note of is that whenever we are doing redemption or we are redeeming debentures, after the redemption of the debenture, the par value of the debenture redeemed must be transferred into an account called a capital surplus. So, if you are financing the redemption from income surplus or from the sinking fund account, it must be transferred from this account into the capital surplus. So if you are doing it from the sinking fund account, then it means that you transfer the par value from the sinking fund account into the capital surplus account. Financing the redemption from the income surplus, then you transfer the par value from the income surplus into the capital surplus account. Here we are using the sinking fund account. So what it means is that we are going to transfer the par value of the debenture we have redeemed. We have redeemed 50 and 75, making 80. Meaning you debit this account 80,000 and credit your capital surplus account. So this account is not here. So you open your capital surplus account, and at the credit side, you are going to have sinking fund 80,000. Then you can proceed to balance of the rest of the account. Now, any difference on the sinking fund account is transferred to the income surplus account or the P&L account. Once we have fully redeemed the debentures from the books, the sinking fund account and the sinking fund investment account cease to exist because they have been purposely created to finance the redemption of this particular debenture. And once this debenture is no more, they also cease to exist. So it's like a president and his ministers. Once the president is not there, what is the use of the ministers at post again? Automatically their tenure comes to an end. So you open the income surplus account and also credit the income surplus account with the difference from the sinking fund account or whatever. Here we are going to have the difference on the debit side. So we debit this account with the difference, credit the income surplus account with the difference. Now the debenture interest account is an expense account. So we balance of this account to the income surplus account. So what it means is that at the debit side of the income surplus account, we are going to have 12,400 in the name of debenture interest. Then at the credit side of the income surplus account, we are going to have 4,750 in the name of sinking fund. We are going to have 80,000 at the credit side of the capital surplus account in the name of sinking fund. The balance of the rest of the account. And that will mean that you have successfully provided adequate answer required for this particular illustration. And basically, that is what the whole sinking fund we've been talking about is, or what we've been talking about is here. So if you have any questions too, you can contact me. I will be free or willing to help you. Now, when you go through your past questions, you can see that you have a sample of a question over here, which I did indicated in the lecture hall. I showed you, I think where they are, I think it's on page 80 and 81, something of that sort. Sample of these questions are there that you can use to test your mind. You can see you have a sinking fund and a sinking fund investment account, just like the way we did over there. So you can just use it to try your hands on it. So this is the question. This is the question. And then let me just see if I can see the solution for you. So those who want to snap, this is the beginning of the solution. So you do it and check to see if what you've done is the correct one. This is the next account you have to also open. Then I think this is how your bank account is also going to look like. This is your bank account. So without much ado, I'll end the class here, and then I'll urge all of you to go and be learning. If you don't understand anything, my number is on the page. My number is here. I just wanted to show you my number so that you get in touch with me if you have any difficulty. And I'll answer you. And as I told you, if you need special help, you just let me know. So when you type this name on the YouTube, Benport Consults, you see this appearing. This is my number over here. This very first one is my WhatsApp number. So when you WhatsApp me, I'll respond. I hardly pick calls. When you call me, trust me, I hardly pick calls because of the busy day I have at work. But when you WhatsApp me and I'm free, I look at it. If even I can't attend to you at that material moment, during my free times, I can attend to you. Make sure when you come here, the subscribe button is here. You hit the subscribe button so that when I release the videos, you will be the first to see it. Trust me, 3 hours to your examinations, I'm going to release some videos and I'll release them without an alert. And those who have subscribed will be the only people who will be seeing those videos. In fact, it will be restricted to only subscribe though. So when you come here, you come to playlist. Then if the video you are looking for is management accounting, go through the management accounting. You find your own. If it is business finance, you go through the business finance. You look for the video you want to watch. If it is financial accounting, it will be here. You look for the video you want to watch. If it is taxation, you do that. On and on and on and on. So management accounting is basically for first semester. So everything here is for first semester. Business finance is both first and second semester. So know the video you are going to watch. You don't watch second semester, know why you are first semester. The same thing applies to financial accounting. First and second semester are here. Taxation to first and second semester are here. Administrative law and accounting theory are for second semester. And so therefore, these ones are not needed right now. So you go to the channel and then visit places and then you see it and then you watch. When you just go to video, it will just upload it show you from the very first videos I uploaded, and then that is not that is it. So thank you very much, and then enjoy the rest of the night.